Jai Hind everyone, welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Today I am going to discuss about RBI's MSME Lending Amendment Rule 2026. Introduction. The MSME sector, a crucial pillar of economic growth, continues to evolve with changing financial policies. With the updated lending framework coming into force from April 1st, 2026, the credit landscape is set for a major shift. The latest amendment aims to ease access to finance, strengthen borrower confidence, and promote a more inclusive lending ecosystem. This history captures how the new guidelines reshape the journey of MSME credit without involving personal names or specific examples. As the financial system approached a new fiscal cycle, institutions across the country began preparing for a revised approach to MSME lending. A fresh directive had been issued to ensure that micro and small enterprises received fairer, simpler, and more supportive access to credit. The central guiding principle was clear: empower entrepreneurs by reducing overdependence on collateral and improving trust between lenders and borrowers. The amendment introduced a significant shift in the handling of small ticket loans. For credit up to Rs 20 lakh, banks were now strictly prohibited from demanding collateral from MSME units. This move removed one of the most intimidating barriers that stood in the way of new and small ventures seeking formal financing. It encouraged more enterprises to approach banks with confidence, knowing that physical assets were no longer a prerequisite for initial growth. The directive further strengthened schemes aimed at employment generation. Loans sanctioned under a national program promoted by Central Commission were also to remain fully collateral free up to Rs 20 lakh. This alignment created a predictable, uniform framework for lending under government supported initiatives. Financial institutions also received the freedom to enhance support for well performing enterprises. Based on strong repayment history and overall financial discipline, the collateral free limit would be extended to Rs 25 lakhs. This flexibility rewarded responsible behavior and promoted the growth of stable, efficient enterprises. Risk sharing mechanisms received special attention as well. Banks were encouraged to use credit guarantee schemes whenever applicable, allowing them to lend confidently while sharing part of the risk with a guarantee fund. This ensured continuity of credit flow even in uncertain business phases. A key clarification also emerged regarding the voluntary pledging of gold and silver. If borrowers choose to offer precious metals as security even within the collateral free threshold, it would not be considered a breach of the rules. This ensured transparency and avoided confusion in cases where borrowers preferred to leverage personal assets voluntarily. With these changes, banks updated their internal policies, streamlined digital workflows, and trained credit teams to align with the revised mandate. Borrowers too prepared for a smoother, more inclusive lending environment. The amendment symbolized a renewed commitment to strengthening micro and small enterprises, the engines that power employment, local trade, and innovation across the nation. Conclusion. The amended MSME's lending framework represents a forward-looking shift aimed at improving access to finance while balancing risk and growth. By easing collateral requirements, encouraging guaranteed credit, and providing banks with flexible decision-making power, the new guidelines nurture a more transparent and supportive credit ecosystem. As the changes take effect from 1st April 2026, both lenders and borrowers stand to benefit from a stronger, fairer, and more empowering financial landscape. Disclaimer: this content is for informational and educational purposes only. It is not legal, financial, or professional advice. For official rules, interpretations, or compliance requirements, please refer to the Reserve Bank of India's official notifications and consult authorized financial institutions. Thank you very much for your patience. Request for like, subscribe and share.